Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me is Vivek. And that modest rally that we had in the market, or the gain, is fizzling out as we speak. The mid-cap index has dipped into the red. The Nifty and the Sensex have completely flattened out. The Nifty had inched up above 22,600, and now we're gravitating towards 22,550. So in a way, it's a bit disappointing. We're practically at the day's low. What's changed in the last 15 minutes is IT. The Nifty IT index had briefly gone into the green, but now it's down close to about 0.6%, with names like Wipro down nearly 1%. Dr. Reddy's is now down close to about 2.5%. Axis Bank has retreated a bit, and that's got a fall of more than 1%. Even some of these private sector financials, they'd opened up in the green with strength, but now they're giving way.
Not holding on to those gains. Some select stocks on the radar. Have a look at M&M. You saw a very steep fall of the entire auto pack last week on the back of Trump tariffs, on the back of Tesla entry in India. But today, it's one of the top Nifty gainers, up almost 3%. But one sector today that's seeing significant selling pressure is actually the metal stock, and the entire pack for the second straight session is under pressure. Hindalco, Vedanta and Alpha among the top laggards. As far as consumer discretionary is concerned, Arun Beverages yesterday that saw a bit of a bounce. Today once again has seen selling pressure emerge, over 3% lower. But two consumer stocks are seeing some buying, and names like Nestle and Colgate have continued to see some buying interest, while the overall market sentiment is quite weak.
Okay, let's get to one of the losers today, and that's Coal India. There is a JP Morgan note. Nigel joins in with details. Nigel, what's concerning JP Morgan?
Well, JP Morgan, they have a neutral rating, and they've cut their target price to 395 rupees per share. They have highlighted three big points. Point number one, they are saying that international pricing, coal prices, have been soft because of oversupply, which in turn would put some kind of pressure on the e-auction prices. So that's point number one. Point number two is they are highlighting from August 2024 till date, we have power demand that's been rather weak. And that's led to volumes being relatively lower for Coal India, and also inventory has moved up. That's point number two. Point number three is they are talking about some of these companies that were earlier customers, but they have been backward integrating, and they have been getting some part of their coal through captive supplies, which has led to some kind of market share loss for Coal India as well. So all these 3 points are causing them to be a little bit cautious. However, they say there's a possibility that they could turn positive. And they've highlighted two aspects here. One is if the stock price corrects to around 340 rupees. And the second factor is that if India's power demand sees a sharp improvement in the coming months as well. So that JP Morgan sounding a little bit cautious because of the top 3 points, but they're saying they could turn their stance based on whether the pricing comes down, that's the stock corrects to around 340 rupees, and the second factor is if power demand improves materially. Back to you.
Thank you so much, Nigel, for joining us and giving us a sense of what JP Morgan had to say as far as Coal India is concerned. But moving on, the stock in focus is Zomato. The stock is doing quite well today. Brokerage firms have written on this particular stock, and Mangam joins in with more details.
Well, remember, Zomato has been a bit of an underperformer ever since it's reported its third quarter numbers, and it's said that there could be some problems with regards to profitability in the quick commerce space, given their investments in that space, and at the same time the competitive nature of that business itself. So having seen the correction, some brokerages are now getting slightly bullish on the company, citing one, favorable valuations, secondly, the steadiness of their food delivery business itself. So Bernstein, for instance, has an outperform rating with a target of 310 rupees. They say that competitive intensity of quick commerce is a key point of debate, but their focus is more balanced on quick growth with medium-term profitability. They see a rational limit to price competition, largely because of the low margin structure of Swiggy and perhaps limited capital available with the other players as well. So to that extent, they don't expect this price competition to deepen or elongate further from the current levels itself. They expect the company to build its quick commerce leadership and continue to stay on that as well. Add to that, the stock has corrected about 30% from the top, making it a lot more palatable when it comes to valuations than what it was, say, 30% above it as well at all-time highs. So all these factors working towards positive move in Zomato. And keep in mind, yesterday the announcement of Zomato's inclusion in the Nifty would also attract a fair amount of passive flows. So as a result of which, the stock is doing well today.
Swiggy, on the other hand, Mangalam continues to lose ground. 2.5% gone. It's lost 35% of its value this year itself. So Zomato up, Swiggy down. But PSU banks and financial institutions like New India Assurance, LIC, are in focus. after the government issued a request for appointment of merchant bankers for stake sale. Sapna is here with the details.
Yeah, hi. So basically, this deals with the minority stake sale program of the government, and I suppose, my reading clearly indicates that possibly the plan is to try and bring all those companies within the MPS norm which have not met them so far. So obviously, I suppose the top candidates, for this game plan, your IOBs, Central Bank, UCO, Punjab and Sind Bank, everywhere, the government shareholding is over 93%. Though Bank of Maharashtra is below 80 now, they have done quite a few QIPs and they have been able to hammer the government dilution, government stake down to that extent, but they have yet to meet to 75%. But these are the four big candidates, and I suppose the government will work on that seriously. The timeline to meet the MPS, of course, was extended time and again, and the next deadline is August 2026. So let's see if something moves within that time frame, because it's only by around the March end that the bankers, the merchant bankers and lead bankers are expected to be appointed, and then their term is for 3 years with an extension of 1 year. So it does not appear that things are going to happen in a jiffy or they're going to happen very quickly. This is a game plan that is in place, and the government will take its own time to, progress with these OFSs. Similarly, if you look at the other public financial institutions like LIC, GIC probably, New India Assurance, all of these have yet to meet the NPS norms. So some kind of stake dilution is definitely possible at that end also. Even some CPSEs, like, for example, IRFC and all of that. So that may also be considered. But of course, the priority focus is going to be select public sector banks and public financial institutions.
Thank you so much, Sapna, for joining us and giving us a sense of what's essentially a developing story as far as PSUs are concerned. Let's now slip into a short break. Up next, we'll discuss what's buzzing the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, one particular stock from the broader end of the market is Dr. Lal PathLab. And this particular stock, in the last 15-20 minutes of session, has seen selling pressure emerge and it's now trading near the day's lowest points. Dr. Lal PathLab is down almost 5% at this session's low. But moving on, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on gold.
Well, yes, thank you for that, Vivek. We are doing that because gold has hit an all-time highs yet again in the overnight markets to around $2,956 to an ounce. Well, the latest support comes in from the fact that the investment buying or the ETF buying in gold has continued to be very, very strong. If you look at the global markets, well, the ETF buying is the highest since 2022. For the Indian markets, we've seen a record monthly inflow for the month of January at around 3,500 crore rupees. And if you look at 2023 and 24, the ETF buying has just about gained much higher because the sovereign gold bonds are not allotted anymore. So you have seen all of that investment demand also go in for the gold ETFs there. The other point to witness is that the US dollar index currently is trading at the lowest since 3 months. You also are looking at US business activity, consumer confidence numbers, data from the US markets not coming so strong. So that benefit also gold has seen in sense of safe haven buying. And then there are concerns on inflation. There also is concerns coming in about the trade tariff impact as well on various economies and asset classes, and that has been supportive. Well, there also is a statement from Trump saying that the tariffs on Canada and Mexico will proceed as planned. So that concern also is back here. It also is going to be about the US PCE data. Well, that comes in on Friday. And then there are 9 speeches slotted from the US Fed officials, all of them in this week. And that is where the street will take cues from.
Thank you very much for that. I think 3 of the Fed official speak is today, but 9 this week. Thank you, Manisha, for that. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar will join in with his top trading bets.
Joining me today is a guest who's decided to make a move from Mumbai to Kerala to head Federal Bank.
I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier.
That was the easier. That is what made it easy. There is best three and next three, and we should lie somewhere in the middle of that pack. The parameters by themselves may change a bit here and there, but the idea is to lie in the middle of that pack, and that's the ambition. We have a non-resident base. It's a moat that the bank has built over several years, and it's probably one of the biggest brands for non-residents in India. These are customers who are very loyal to us. Sometimes second, third generation of those customers are banking with us. If we make an offer to them on the wealth side, I'm sure we have the trust, their trust that they will buy those products from us. We will pace ourselves in a manner that we keep control of our parameters and do not run away with too much investments in the beginning in the hope of getting revenues. We will balance ourselves.
Break into the top 5, which is the aspiration. Doable in the next 4 years?
The place where the bank is currently and where I want to take it, I think it is very well doable.
Welcome back. 361 is higher in trade, and that's got a gain of close to about 3.5%, 3.7%. Now, remember earlier this month, or about a month back, the company acquired BNK, Batliwala and Karani. Now, yesterday, the company held an analyst meet, and brokerages are fairly upbeat post the analyst meet. So, Motilal Oswal has a buy rating. Their target price is 12.50. They say, the BNK acquisition is a strategic fit. From the analyst meet, the takeaway is that the deal is likely to be EPS accretive by 3 to 5%. The company also expects a revenue growth of 15 to 25% in the BNK business over the next 3 to 5 years. In the core business, Motilal Oswal says 361 is poised to gain market share in the current market conditions, with clients holding 10 to 20% cash for equity deployment. Jefferies too is fairly bullish post the analyst meet. Their target price stands at 12.70. So EPS accretive, and they expect BNK to grow 15 to 25% over the next 3 to 5 years.
So 361 WM is up 3.6% in this session today. Well, moving on, Mitesh Thakur joins in for a quick technical check on the market. Thank you so much for joining us, Mitesh. What do you make of the markets at the current levels, especially as we head into expiry?
Good morning. To be very honest, I think I don't make much today. It's been a very subdued day. Just, trying as if it's trying to hold on to the yesterday's close after that big decline. My sense is that this is a market which is still weak, and a reversal will happen only once we start seeing the Nifty get past 22,800. And therefore, we identified yesterday's gap as the pivot where traders can look at shorting. So any intraday rallies to about 22,680, 720 zone, which is the gap area. I think around those levels, I would want to short with a stop about 22,735. And if we get past 22,800, then we'll even look at long trades. But for the timing, it looks like a market which is showing weak texture, and therefore sell-on rallies is the idea on the index.
And your trading ideas and a particular word on M&M. 2 days of big gains, 3% up now today.
So M&M, actually kind of managed to just rebound from that support of 2,700, 2,670 on a weekly basis. So I think this week the stock made a fresh low around 2,630, and today has given a gap up for reversal. M&M actually could get back to about 2,875, 2,880, which is the 200 average area. And if it can get beyond that, then good chance we'll even look at 3,000 over here. It's one of these stocks which is declined in the last 2 weeks, but it's still not an underperforming mode to the Nifty. So I think this is one of the stronger stocks. And on my stock calls, I have a buy on JSW Energy. It's given a pullback and is now trading near that support area. So buy with a stop just below levels of 464. Look for a target of 500. And a sell on Federal Bank. Federal Bank is something which is breaking the congestion level of 180. So sell here with the stop at 181 for targets of 172.
Mitesh, any views as far as the IT space is concerned? It's been one of the sectors that's been beaten quite sharply in the last couple of trading sessions. Any opportunities you see there?
No. In fact, I was in the morning call show. I was discussing that this is one of the index which is given a fresh breakdown, and the Nifty IT could get to levels below 39,000 or 38,900, which is the pivot area. So I think we are looking at 38,600, 500 zones before some kind of reversal will come in. So I still maintain a negative bias on the IT back.
I remember you said yesterday it broke the 200-day moving average, so the texture on Nifty IT has weakened. Thank you very much for that. We will slip into a very short break. By the way, Tata investment is up close to about 8%. Remember, Tata Capital earlier announced that they're planning for an IPO. It's majority owned by Tata Sons, and Tata Capital had to do an IPO because it was classified by RBI as an upper layer NBFC, and the deadline to list for upper layer NBFCs was September 2025. So Tata Capital will go ahead with an IPO, but the stock which is moving up today is Tata Invest. It's owned, again, this one also is owned by Tata Sons, and it's majority, an investment company, investment arm vehicle for the Tata Group. We will slip into a short break. On the other side, we'll discuss market fundamentals. Deepak Ramaraju, Senior Fund Manager at Shriram AMC, joins in next.
Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 showed further deterioration in their asset quality. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty.
But onto our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well.
Welcome back to Trading Hour. Well, as promised, Deepak Ramaraju, Senior Fund Manager at Shriram AMC, joins us now to discuss market fundamentals as well as his top sectoral picks. Thank you so much for joining us, Deepak. First up, give us a sense of what exactly you're making of the current market fall. Where do you see valuations turn attractive, or are you still playing it safe by continuing to not deploy incremental flows into the market?
So, thanks for having me on the show, first of all. And markets are seriously kind of come down quite a bit, and then we are seeing kind of aggressive kind of selling coming from the FI side. But having said that, it's time to kind of building the books right now. So slowly add into those beaten down stocks and try to build out those quality names which are going to outperform in the near-term future. So that's what we are looking at as of now. So, but the market is still in the kind of negative mode. As of now, the correction is still going on from the FI side, and we expect that to continue for some more time. Until unless the conditions, especially the tariff conditions or the related inflation situations isn't out there, we don't expect the FIs to turn positive on the Indian markets immediately. So having said that, we are going to still see that FI selling to continue, and that's the reason we are going to be kind of seeing the pressure. But we are not very far off from the bottom. That's my sense on the market.
You were not far off from the bottom. That's your view.
Yeah.
Okay, and this is even on mid and small caps, or do you think mid and small caps is still a bit overextended?
Mid and small caps, still the relatively valuations are still on the higher side. We can expect some more corrections to come in, but the smarter money are kind of adding on those quality names. So some of the institutional buyers or the HNI money we are seeing some kind of buying happening in those counters. But again, it's going to be like quality names. We need to pick it up. So it's going to be a stock picking market going ahead. So one needs to be very selective in the stock picking, and it has to be on the quality side going ahead. So that's what my sense of the market is as of now.
Deepak, so where are you seeing value emerge? Which sectors, which pockets of the market do you feel that one can start looking into now?
So I'm still positive on the consumption theme as a whole. So overall consumption is going to do, and would be more on the domestic focused companies rather than looking at the external focused companies. So that would be the broader theme that I'll be more focused upon. So when I talk about the broader theme on the domestic focus, it will be more to do with the capital goods, which are supporting the infrastructure growth here to a certain extent. Though the stocks are still relatively expensive, there's some more kind of froth left in those names. So we are seeing the correction happening in those part. But yeah, eventually we can expect some kind of buying to come back, and this sector can actually bounce back very strongly. One. Second thing, power and power related stocks are really doing good, and the power demand is going to go exponentially from here on. So we can expect the power and the power related sector or the kind of transmissions space to do better well going ahead. So those are the space which are expected to perform better going in my view. And from a tax break perspective, which was a positive for the consumption side, so you can see some incremental discretionary spending to come up. So that's another space that I'll be more bullish upon going ahead.
What about banks? Where do you stand on banks, Deepak? And NBFCs? Is value emerging in NBFCs?
Definitely, there is a short-term valuation uptick, but from a long-term story perspective, the long-term impact on the banking space is going to be more competitive. The NIMs are going to be very kind of under control stress, because the deposits also have to kind of go up, and as well as we are seeing more kind of pressure coming in there. So from a short-term valuation uptick, yeah, it makes sense to have some kind of short-term buying on the banks. But from a structural perspective, for the long-term kind of portfolio construction, I would look at selected names, especially very choosy on the selected names, especially on the private sector banks, or for that matter, a few selected NBFCs. I would avoid the microfinance space as of now, because the NPAs are still on the rising as of now, and we are still seeing the stress, especially coming from the rural side. So we'd definitely avoid the microfinance space or the banks which are kind of having exposure to the microfinance lending. So we'll be avoiding those space going ahead. So selected names is what we'll be focused upon. I would be more bullish on the power lenders, basically the power sector lenders. So those things are emerging much more strongly as of now.
So within the financials, you prefer power lenders. Some names there include REC, PSC, as well as IREDA. Well, you've spoken about utilities, you've spoken about power lenders. So clearly you do have a preference as far as the power space is concerned. You also spoke about transmission. So would you play the power sector through utilities, public sector or private sector, or would you play it through the ancillary companies, some of the capital goods companies, transformer makers? Where exactly do you see your preference lie?
So I would have a combination of both. So would more prefer to direct it towards the ancillaries, and then as well as the capital goods space, because again, they also have an export oriented focus there as well, not only the domestic market, they'll also be catering to the other export markets as well. So transformers companies really look positive from here on, and as well as some of the ancillaries like your switch gears and kind of manufacturing companies. Those are the companies which really expected to perform better going ahead.
Understood that. Within the consumption space, you said that you're now turning incrementally constructive. Where does your preference lie? Is it more discretionary consumption, or do you like some of the staples?
Discretionary consumption is definitely the space that we want to be in. Staples are more kind of a saturated space to a large extent. The urban demand is kind of growing in a single digit. So I don't expect it to do a double digit growth or any kind of significant growth coming here from the staple side. But discretionary spending, definitely yes, because of the tax breaks and kind of the money left at the hands of the citizens. So it is going to get manifested into kind of discretionary spending or aspirational buying. So that's where I'll be more focused upon looking at the premiumization theme as a whole. So look at some high-end kind of companies like, for example, auto space, and as well as the durable spaces. So those are the companies that we need to focus upon, where the premiumization themes or the aspirational buying is going to happen. So those are the themes that are going to outperform compared to the generic staples kind of companies.
Understood that. One large sector as far as the economy is concerned, also a GDP multiplier, has been the real estate space. Realty stocks, especially in the last month, have seen a significant correction. Do you feel that this particular sector has further legs to run up from here on, or will you be cautious at current levels?
I'm still cautious as of now on the real estate side, but eventually, as we go, the valuation still has to correct more in the real estate space. So it's not really attractive. And also with the aspirational buying coming, you might see some kind of uptick happening in the kind of the properties or the upscale market. But we'll be very selective and choosy on the names. So we're not adding a big high ticket numbers or kind of have a broad-based kind of view on the real estate. So it's going to be kind of a muted kind of a growth for real estate to going ahead, in my view. So.
Okay, your preference lies with consumer discretionary power and power utilities. Thank you. We got that. Thank you, Deepak, for joining in. Now let's get our viewers the big exclusive of the day. Federal Bank MD and CEO, in his first interview after taking over, says, "I wanted to be the captain of my ship." Speaking to Shireen, he says the bank is well poised and is drawing up a plan to break through the top 5 private banks with a focus on return on metrics. Here's an excerpt.
I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier.
That was the easier. That is what made it easy, I think, and the opportunity itself of Federal Bank. Very, very well poised, great journey. Pulled out of the pack of old private sector banks, clearly leagues ahead. Just the breakthrough into the top league is possible. That story excited me, and I am, I am a kind of person who needs to come to work every day with a spring in my step, wanting to do new stuff, and I thought this was a very, very exciting opportunity. There is advantage of that brand visibility in the adjacent state. At least the adjacent states know the brand well. So I think growing outward from that state into adjacent states and then beyond is something that will help us. Some of these are really strong bases from where you can build out. And I am quite optimistic that if we can replicate these 3-4 elements, service, the Rishta, the attrition rates, these are very strong positives. We are very clear. Phase 1 of the plan is Tamil Nadu, Maharashtra. You will see the expansion, far deeper expansion in these 2 states first. And as I said, we will keep rolling out to Karnataka, Andhra, Telangana, and then to the other states going forward. We also have a good moat built over years in Northeast, by the way. So there are some advantages in some other parts of the country as well.
And you can catch excerpts of this exclusive conversation with Federal Bank's MD and CEO all day today, only on CNBC-TV18. Welcome back. IT is clearly the sector in focus. Out of the last 13 sessions, it's declined for 12.
Wow.
That's the extent of correction that we've seen in IT over the last couple of trading days. Now, the NASSCOM Leadership Summit is currently underway. Today is day 2, and yesterday they projected that the Indian tech sector will cross $300 billion in revenue, which compares with $282 billion of revenue that they expect to close FY25.
Today we are seeing selling pressure continue and intensify in the IT pack. Look at names like Tata Elxsi, look at names like LTTS, look at names like Cyient, Tata Communication, maybe not IT, but again, these stocks are seeing significant selling pressure. All of them trending near, all of these names trending near the day's lowest points. And in fact, let's now move across to the Assam Investor Summit, where Sri Mukesh Ambani ji is talking.
Hemanta Biswa Sharma ji, respected Dr. Jaishankar, respected Sri Sonowal ji, respected Sri Jyoti Raje Scindia, respected Governor Shri Lakshmi Prasad Acharya, respected Shri Manik Saha, distinguished delegates, ladies and gentlemen. So, Kolere Proti Namaskar. It is an honor to be speaking again at the Advantage Assam Summit. Before I begin my address, I want to sincerely pray to Ma Kamakhya, the goddess of energy and creation, not only to bless all in Assam, but to bless all of India. Param Adarniya Pradhan Mantri Shri Narendra Modi ji. The title of this summit is Advantage Assam, but the greatest advantage for every Assamese and every Indian is that we are blessed with your visionary leadership. In the past 11 years, you have brought 4 unique advantages to Assam. Advantage 1, you have brought Assam and the rest of Northeast from the periphery to the center of India's development map. You have yourself visited the Northeast over 70 times, more than any other Prime Minister in the past. Advantage 2, you have given an inspiring new mantra to Assam: act east, act fast, and act first. Assam indeed has the potential to develop so fast that the Southeast Asia and the East Asia will begin to look westwards towards Assam as the land of growth opportunities. Advantage 3, you have heralded an unprecedented era of connectivity revolution in Assam and Northeast. Not only physical connectivity, not only digital connectivity, not only developmental connectivity, but above all, you have promoted emotional connectivity between the people of this region and the rest of India. Advantage 4, you have made technology the main driver of development. Because of the popularity of Assam tea, until now, Assam is known as the tea paradise. In the coming years and decades, I am sure Assam will be known to the world also as a technological paradise. Assam's tech-savvy youth will give a new meaning to AI in the coming decades. AI will not only mean artificial intelligence, but will mean also Assam intelligence. Honorable Shri Chief Minister, Shri Himanta ji, under your passionate and youthful leadership, Assam has emerged as one of the fastest growing states in India. When you recently came to meet me in Mumbai, you said, Mukesh bhai, it is not enough that Assam grows at double-digit rate. It should double in size in the shortest time and double again every time. I will not rest until I make Assam a mega economic powerhouse. Your words convinced me that your vision for the future of Assam is bold and extraordinary. And I said to myself, when Assam is setting such an ambitious goal to itself, how can reliance in industry stay behind? Dear participants in this summit, in the previous summit in 2018, Reliance had committed an investment of 5,000 crores in Assam. Since then, our investment in the state has exceeded 12,000 crores. In the coming years, Reliance will more than quadruple this investment in Assam to over 50,000 crores over the next 5 years in the following 5 priority areas. Our first priority is to make Assam tech-ready and AI-ready. For us, Assam's digital transformation is a noble and patriotic mission. Jio has made Assam not only 2G Mukt, but 5G Yukt. We are very grateful for the people of Assam to adopt Geo with their heart. After building world-class connectivity infrastructure, we will now install high-performance computing infrastructure. Reliance will establish an AI-ready data center in Assam, which will benefit students with AI-assisted teachers, patients with AI-assisted doctors. Agriculture will benefit from AI-assisted farmers, and AI will help Assam's youth to learn from home and earn from home. Our second priority is to make Assam a hub of clean and green energy. This will include nuclear energy in line with the government's new policy to invite private participation in the nuclear industry. And Reliance will build 2 world-class hubs of compressed biogas and CBG over wastelands in Assam. This will produce 8 lakh tons of clean biogas annually, enough to fuel 2 lakh passenger cars every day. Our third priority is to help Assam become a major supplier of food and non-food consumer products to national and international markets. We will set up a mega food park which will add value to the abundant agriculture and horticulture produce of Assam. We have already set up a world-class bottling plant in Assam for our Campa Cola and Independence range of packaged drinking water. Our fourth priority is to double the number of Reliance retail stores in the state from existing 400 to 800 stores in the next 5 years. Our fifth priority is to boost high-end hotel and hospitality economy in Assam. Assam will build a luxurious 7-star Oberoi hotel in the heart of Assam. These 5 mega initiatives will also create tens of thousands of direct and indirect employment opportunities for the youth in Assam. Friends, today I am also pleased to announce a philanthropic initiative by Reliance Foundation. Assam has a rich heritage of arts and crafts. It is one of the largest producers of bamboo, which is called green gold, and Sualkuchi, the center of Assam's famous silk industry, has the potential to grow manifold in generation of incomes and jobs. Reliance Foundation, together with our Swadesh stores, would like to collaborate with the state government to promote this heritage. Most esteemed friends, I conclude by affirming that the possibilities for Assam are aseem. They are limitless. I assure our Prime Minister, Shri Narendra Modi ji, and the Chief Minister, Sharma ji, that Reliance will continue to remain a proud and dependable partner in this mission. And I again end with my sincere prayers to Ma Kamakhya to bless us all. Thank you.
Thank you, sir. May I now request Shri Natarajan Chandrasekaran, Chairman Tata Sons, to kindly address this August gathering.
Okay, lots of titans of the Indian corporate industry present at Advantage Assam, and we just heard Mukesh Ambani. They've invested a lot in Assam, and going ahead, they believe it will be a technological paradise, and also known as Assam Intelligence. Get into a break. We'll come back with more on the markets.
Hello, how are you? Good. I know you're doing CNBC for like 30 years. CNBC is only 25. So I...
Banking aspirations.
So I would say never to anything.
So I think it's an amazing time to work in India. If I were a founder who is starting up today, I would want to start in India. It's an amazing
In fintech?
place. In fintech. Who breaks the silent period? Only for in the business and professional setting, you will not have anything.
Now now on MobiKwik app, you can actually have digital cash. The motto for CBDC is not cashless, it is less cash.
Our focus is, given that we have such a large user base and also small merchant base, we first connect with them over daily life payments. Now after that, after looking at their KYC, their profile data, etc., we are trying to now diversify in terms of giving them access to the right investment product.
Followed with
Is that a space that you're going to look at?
now EA is becoming cheaper and cheaper. For sure, it's a space that we are definitely looking at. We didn't sell a single share in the IPO. Neither did any one of our shareholders. That tells you about what they think about the future of MobiKwik.
Well, welcome back to Trading Hour. When we started the show, most of the indices were in the green territory, but we've quickly given up all of those gains. Nifty barely holding on to gains, trading near the flat line at the Sensex as well. But a couple of stocks from the broader end of the market that have seen a very swift decline. One of those stocks is Canfin Homes, especially in the last 15 minutes of the session. Canfin Homes has slipped almost 6% intraday. Like you can see in the last 15 minutes, there's been a very sharp decline over there. The other stock is Gujarat Gas. That stock too has seen a very sharp selling pressure emerge. And PVR Inox at one point of time in today's trading session was actually trading in the green. And this particular stock is now down close to 4%, almost 2.5% fall as far as PVR Inox is concerned.
Narayana Health. Let's just get that up. That's close to about a 7% up move. It's been inching up in the last 30 minutes, and now it's pushed its way to a 7% gain. Well, with that, it's curtains down on Trading Hour. We leave the markets absolutely flat on the Nifty and the Sensex, but mid-caps are down close to about 200 points. Thank you for watching the show. Don't go anywhere.